Tuesday morning, 10 to 7. Good morning. Okay, here we go. Let's have a look at the financial markets. Today, US dollar has just pushed higher again, exactly what we expected. Although the dollar versus the Canadian actually sank yesterday. Now it sank to the big support level that I had. Let me see where was the low. Okay, I'm going to need my crosshairs for this. Actually, now we didn't quite get to my buy level. Oh, we did 124.91. Okay, I had 124.90, 124.80. So if we get to 124.90, 124.80 today, if we dip back, this to me is the big support level of the day. And I'm looking for a bounce off there. As you see, we bounced about a pip above it already. But you never know. We might reverse from 125.20.30, come back down to 124.90.80, and then take off. That's what I would like to see. I've drawn it in. So I'm not saying that this will happen. I certainly wouldn't be selling into a short position up here because I think the dollar will eventually go higher. But the Canadian dollar was strong yesterday. Anyway, that definitely is for me the big support level. So we'll see what happens there. The euro US dollar has been going down and down and down. That's exactly as expected. We have held our resistance levels. This is a real nice resistance level, wasn't it? Around 116.10, 116.20. Now, I doubt you've held shorts all the way through. Holding shorts over the weekend isn't something I advise anyway. But nevertheless, I have expected the euro to plunge against the dollar, and that's exactly what happens. So selling on a break below support has also been working particularly well. We've hit my target of 113.80.70. We're very close to the next target of 113.50.40, and eventually I'm expecting this market to hit 113.00. So if you have been running shorts on the swing trade suggestion that I gave you when the dollar index broke higher, then that has certainly all looked good. Starting to get oversold on the daily chart, but we're in a bear trend, so being oversold on the daily chart really doesn't matter too much. It certainly doesn't mean that we should be buying into longs. No. Now, this is an interesting perspective. When you look at this on the weekly chart, you really realize that we're just in one big sideways trend. We have been all the way back to at least the end of 2016. So really, that's a 5-year sideways trend. Now, what can I put on here? So if I just use my crosshairs to sort of look at what probably is the midpoint around here. Well, anyway, certainly the 500 week moving average, which is around 115.5, we've well broken that. And you look at the weekly chart, really there is a lot of scope for downside moves. This really could just be the beginning. I mean, we could get to 108.00. That's over 500 pips lower. I'm not saying it's going to happen quickly, but that is actually a realistic target for this pair. What else can I say about this? At the moment, we're obviously sort of mid-range, but I just don't see a support level there. So anyway, yes, certainly could be significant further scope for downside moves for the euro versus the US dollar in the longer term. We have been very oversold on the weekly chart for quite a while, but as I say, that doesn't necessarily mean anything. Gold is really having a tough time. Has been having a tough time for a while. Talking of sideways trends, well, look at this going back a year and 4 months or something. Just hasn't managed to break higher. In effect, we're getting lower highs, which is not what you would expect in such an inflationary environment when everyone talks about gold being a massive inflation hedge and therefore should go through the roof. Well, we've got inflation that's the highest for something like 20 years, and we haven't even managed to break the peak from May. We haven't even got anywhere near it. That high is at 1916. We've got to you can see the trend line at around sort of 1870 is what is holding it. I identified that trend line for you. I suggested it would be strong resistance, and scalping on short positions on that level is working. Obviously, if we get a significant break above 1877, something like that, then we should push up to this previous peak, but it's just not looking likely at the moment. If I was a bull, if I was holding gold, because I was expecting it to rally on such a big inflation number, then I would be severely disappointed right now, and I would certainly be wondering if we're not going to move to the downside to this big support level down here at around 1835, 1830. Or even worse, I suppose, when you look at it on the weekly chart, we are nowhere near the previous peak, and we're only sort of mid-range of this sideways trend. So again, silver not reacting to strong inflation, Very disappointing if you had thought silver would be an inflation hedge. In fact, you can't even get through the 50-week moving average at the moment. I'm a trend follower, so not surprising for me to see the stock markets continue higher. The amount of messages, emails, and so on I get through social media, people ask me why the stock market's still going up, why are they so high, and I just say that you just can't fight the trend. The valuations may be crazy. There's stuff all over YouTube, etc., about how crazy valuations are of the stock markets, but it's a bull trend, and people are buying on dips. So don't fight it until we get something telling us that we have a very negative reversal pattern and the market is going to dump. It's just not happening. Now, let me show you something. I've jumped back to 2007 on this S&P chart. Now, if the market's going to crash, you're going to see something like this. This is what you're probably going to see. I can't guarantee every crash is different to the last one. The market could just turn around one day and dump 50%. I don't know, but more than likely you're going to see something like this. Now, this is a pattern that I spotted at the time, and I advised my subscribers and customers and everything else that the market was going to crash. And it's very simple. This head and shoulders pattern built up over a number of weeks. Let me see now, a number of months actually. Sort of started in February, ended in, okay, so it was about a year that this pattern built. So I could call this the left shoulder, I could call this the head, and I could call this the right shoulder, or I could actually say that this is the right shoulder, this is the head, and this is the left shoulder, head, right shoulder. But anyway, there is sort of head and shoulders patterns within head and shoulders patterns, and I've talked about this before. If you've been following me for a long time, you'll know that this is the kind of thing I look for. Now, this is just one massive topping pattern, and it was pretty obvious to me that the market was going to collapse. The market didn't start to dump until here. I think this is probably when did the Lehman's thing happen? I think that was it here? Yeah, I think it was September of 2008. But look, by the time September of 2008 had happened, the reason Lehman was in so much trouble was because the market had already fallen significantly. And it was only then that we accelerated to the downside. The pattern had already completed. Anyone who's doing technical analysis and understands head and shoulders patterns already had seen the sell signal. The market had only completed that pattern after significant losses. So this is the kind of thing I would be looking for if we think that the stock market's going to crash, and we're nowhere near that at the moment. Look at the Dow Jones. We're just hitting all new highs constantly. Last week, okay, we traded sideways, so we have these consolidation phases, but there is nothing. No sort of negative pattern whatsoever. No, not even a negative candle on the weekly chart, let alone any sort of pattern that's telling us the market's going to collapse. I think for the Nasdaq, okay, a neutral candle may be this sort of hammer or even a doji following the big green candle. Not the most bullish thing you would want if you were long, but certainly no sell signal. Definitely nothing insofar as a negative pattern is concerned, even on the daily chart. This is just a consolidation phase, maybe a flag, something like that. But there is nothing telling me that this market's going to crash. Maybe I'll eat my words and next week we'll dump 50%. But there is nothing telling me that is going to happen. Germany, 40, edging very, very slowly higher. It's painful. It's a struggle. But nevertheless, it is a bull trend and we are going higher. Even the UK 100, the FTSE, is going higher. Very difficult to hold a position. Look how many down days we have. We push up and then pull back. It really is 2 steps forward, 1 step back, or very, very much of a struggle, or probably 3 steps forward, 2 steps back. But nevertheless, we are in a bull trend and the markets are trending higher. Looking at the dollar index, we had that buy signal when we did that. Right, that's the around here. And of course, we're well up. Since then, we are, certainly 80 points higher or so on the dollar index, straight through the 200-week moving average as expected. And now we've beaten this trend line, which again, as expected. So that's the support line for the dollar index at around 95.40, 95.30. If we were to get back to the 200-day moving average, which 200-week moving average, which I'd be very surprised to see because we've already made a low for the week above there. But 90, sort of 94.90, 94.80 would be the next big support level. But I think the dollar's going to keep pushing higher. You know that already. I've been talking about the euro going significantly lower against the US dollar, and I've been talking about the dollar index going significantly higher for quite a while, getting a little bit overbought on the daily chart, but I'm not bothered about that whatsoever. Then I talked about Bitcoin trading sideways and could continue higher, but that's all been reversed now. Bitcoin has just collapsed overnight. If it breaks 60,000, I think we've got further significant moves to the downside. Really below 59,500 would be the trigger, but I think below 60 would be enough. And basically, I see it's going to 54,000. That would be the next point of call. Yeah, it doesn't look good for crypto. Well, we could survive if we hold above 60,000, we're okay. The problem for me is that Ethereum, which has been the strongest market, has broken or is trying to break below the 23.6% fib at around 43.5. Now, it looks like it's actually done that. We're bouncing back to that level, but if we hold below 43.50, then the outlook will be negative, and I see us heading towards 4,100 to 40,000. That would be the next big support level. We'll see if that holds. Okay, I hope that's informative and helpful. Join me again tomorrow when I'll be doing my usual video updates around this time. Thanks a lot.